Good morning and welcome to the second in our InvestTech virtual conference series. It's a pleasure for us to be able to host InvestTech for you. It's a shame that we can't meet in person, but we're all now pretty familiar with the virtual format for these. So InvestTech spreads out over the whole of this week from 12 to 1 each day. And we really have assembled, I think, a really interesting set of presentations to talk about technology and its various aspects in the use of portfolio management and in assembling and managed account service for advisors. Yesterday, we started off with spoiled for choice in advisor technology and spoiled for choice in managed accounts. And I know I found those both very interesting sessions. But today we have a really interesting and action-packed, information-rich session from both our presenters. In a moment, I'll introduce Michelle Cameron from Refinitiv to introduce Alex Johnston from Refinitiv and Nick Morton from Resonant. And then at 12:30, I'll introduce Andrew O'Riordan to talk about managing IT projects within an advice business to avoid disaster. Let me just thank our sponsors first. First of all, without whom this series would not, of course, be possible. A couple of housekeeping points. If you'd like to ask a question of any of our sponsors, or of any of our presenters, you'll find a Q&A button at the bottom of the screen. You can also use chat as well, but Q&A will pop up for the presenters and they'll deal with that as they go. At the end of today, we'll be asking a couple of polling questions which relate to today's topics, and we'll draw one of the responders from those polling questions for a $100 voucher. Those of you who registered, self-registered or were invited by a sponsor to participate today will be receiving a menu log voucher for this week. So that's a small gesture of our thanks to you for participating. The video for each session will be posted within a couple of days on the IMAP website, and you'll be able to view that or share it, and the slides will be also available. Andrew also has a guide to project management, which we'll be sharing with you as participants. So it's now my pleasure to hand over to Michelle Cameron from Refinitiv. Michelle is an account director with Refinitiv, with 20 years experience working in financial services. So Michelle, thank you and welcome to today's InvestTech session.
Thank you very much, Toby. I always love it when someone else introducing me. Thank you also to IMAP for giving us the opportunity to speak with you all today as part of the InvestTech series. Always great to connect with this community. So today for this session, I've got with me my colleague from Refinitiv, Dr. Alex Johnston. So Dr. Alex is our resident intellect. He manages a team of solution consultants for Refinitiv in the Pacific, whose job it is to come up with kind of creative workflow solutions to solve challenges that our clients are facing. So apologies for being a bit scripted with the intros, but I could not memorize the list of accolades of those that we've got on the call today. So here goes. So Alex is a bit of a theme here, has over 20 years experience also within the financial services sector and academia, and focuses efforts on emerging technology deployment. He completed his PhD in 2008, which incorporated artificial intelligence and semantic web technologies that are increasingly in use today and ever more so in the current virtual environment. So Alex has held roles in leadership across EMEA, the US and APAC at Thomson Reuters, SunGard and Lloyds, and has a track record of identifying and implementing new technologies for transformation purposes. So we're also lucky enough to be joined by Resonant's CIO, Nick Morton, who has been in the industry again for over 20 years, with stints at Citigroup, where he was the Director and Head of Australian Quantitative Research, CFS GAM, where he was responsible for their core Australian equities portfolio, and now Resonant, where he obviously holds the CIO role and specialises in quantitative finance. So Nick is an expert, which I'm sure you'll see, in coming up with and implementing trading equities and multi-asset models. He holds a Master's of Aeronautical Engineering degree from the Imperial College, the University of London, and also holds a Masters of International Business and Finance from the University of Sydney. So we're clearly in good hands and brains with our speakers for today's session. So just while I'm doing introductions, briefly, Resonant and Refinitiv. So Refinitiv, a global provider of financial market data, technology and expertise aimed at enabling the financial community to operate efficiently and access information and tools to improve workflows. Resonant, an asset management firm that I'm sure a lot of you are familiar with, who provide research and consultative services, applying quantamental investment processes to benefit the institutional funds management sector. So in the current climate, with the volatility across the global markets right now, it's ever more important that you as professional advisors are able to harness data that's available to you quickly and easily to help you inform your investment decision processes. So this session is only a quick 30 minutes. We're going to do a bit of a whistle-stop tour aimed at providing you an overview of Refinitiv's portfolio analytics capabilities and bringing this to life through a practitioner's perspective with ways that Nick utilises the information to make decisions. So we're going to show you how you can build your own strategies, align objectives, drill into sectors and themes, and provide some visualizations to help you interpret the data that you'd have access to. Now, I should warn you, Alex is clearly not feeling very risk averse today. He's chosen to do some live product overviews, which, as we all know through likely personal experiences, is a brave move. So as Toby mentioned, if you have questions through the session, feel free to answer them. We'll see them pop up. We'll either answer them as appropriate there and then, or we'll come to them at the end. And if we don't get time to come to all of them, we'll reach out to you afterwards. So just to kick us off, I thought the best place to start was for our industry expert, Nick, to give us a bit of an overview of some of the themes and industry trends that he sees and feels are particularly relevant right now and that he's keeping front of mind in the current climate. So Nick, over to you.
Thanks, Michelle, for that excellent introduction. So yeah, exactly as Michelle says, you know, like all industries, the wealth management sector is going through a period of enormous change as clients demand increasing customization at a lower price point without sacrificing performance. Resonant really has embraced data and technology as a key means of delivering on those objectives. In addition, we'd argue that in the last few years, acceleration in three key areas of markets are forcing portfolio managers to at least take heed of the information available in commercially available data sets for mapping out market expectations, modeling relationships across asset classes, or staying on top of global groupthink. So the three key areas we see as having changed are the popularity of factor investing. So whether that's in institutional space, for example, with industry funds that target specific factor exposures, or smart beta ETFs, such as the equal weighted portfolio MVW or the value weighted portfolios, investors of all stripes are now trading factors in a frictionless fashion, which means either traditional successful trades such as relative value or trend following have become either arbitraged away, or the dimension on which investors now overbid, depending on your view of the efficiency of markets. Either way, it is no longer possible to manage short-term risk and drawdowns on an equity portfolio without having referenced the exposures of your investments along those factor dimensions. The other second factor is macro risk. Extraordinary monetary and fiscal responses of recent months have propelled the VIX index, a key barometer of risk appetite for asset allocators, far beyond its long-term average, and looks unlikely to normalize in a hurry. And finally, the other point I would make would be information flows in the global network. Social media and zero-cost trading have closed the time it takes for events to price into the market, with repercussions for portfolio managers who need to stay on top continuously at company events. The systems and technology we've built at Resonant enable us to deliver high-performing, low-cost, multi-asset managed account portfolios with direct stocks. The cornerstone of all our services is a comprehensive cloud-based SQL database that contains market data such as prices, volumes, company data and forecasts that enable us to build our so-called quantamental factors, and client specifications such as asset allocation ranges and targets. The outputs are essentially customized private managed accounts, conforming to client requirements, whether that is for an income tilt, a risk target, an asset allocation preference, and a suite of portfolio management tools which enable us to manage positions in a timely and effective fashion. When we set out to build our database, we scoped the market for third-party solutions and went through an exhaustive process to find a suitable partner. And we used some key elements of Refinitiv's offering, not just the desktop services, but also through the data feeds, given that we're managing a huge technology exercise at the back end. So back over to you, Michelle.
Thank you, Nick. Very nice way to follow up. So I'm going to bring Alex in now and get him to help us understand how that Refinitiv data platform can bring some of this to life. So as Nick mentioned, at Refinitiv, we have a desktop platform icon. We also have other kind of data feed services, etc., that are utilised by this community. So it provides data across all company fundamentals, news, macro, economic data, StarMine Analytics, ESG. So Alex, do you want to just talk us through the fundamentals of portfolio assembly using our platform?
Yes, thanks, Michelle, and great to be here, everyone. Well, Michelle mentioned two things there. So there's kind of the real-time data feed that we plug into most of the back ends of systems, but certainly we have a way of surfacing that for individuals, and that's through our Icon product. So and through the Icon, we can view a number of fundamental ways of looking at a stock or portfolios, whether that's your traditional allocation criteria, whether you look diving into individual stocks themselves to understand the quality of their earnings through some of our kind of machine learning and proprietary algos that do that through StarMine, for example, whether you're looking at allocation on an ESG basis. Icon allows you to surface all of those content sets in one place. And something I'm going to be showing you today is how you can filter through that straight from a portfolio view, looking at the MSCI as an index, as a global index, which obviously I think is quite interesting at the moment with so much of the churn and the surprise that came out of the US, that the S&P going as high as it has. So I thought I'd just show, would you like me to demonstrate now, Michelle, some of these screens and how we might go around the allocation? Let's do that. So let me just share my screen. And I know Nick's going to jump in at certain points and talk about the parts that he finds useful. So let me just open this up. And the first screen I have up, let me know if that's available.
Yep.
There we go, marvelous. So here, what I've done is I've tried, instead of kind of building something on the fly on this call, which certainly would be very brave. I've just taken this straight MSCI equities portfolio. So a lot of global stocks here. What you can see here is this is kind of my cut of it. We've got 22 securities in there. If you look at the top, I'm looking at the top right here, we've got of the top 25 holdings in the MSCI portfolio, we've got 100% of those, but we're showing some variability by only having 84% of the top 15. So what I thought I'd show you today is how you can use ICOM to track that. So here you can see how it's allocated across GICS, obviously the economic kind of sector classification. So you can see a lot of this is consumer staples. We've got some cash and equivalent, which obviously makes this different to an index, because an index obviously won't have any cash in it at all. So certainly there's that differentiation from the outset. And then this is just really the summary. You can just see in one place where the weighting is and how that's differentiated across, in our case, a far more weighting in consumer staples and a bit less weighting around healthcare and financials. What I'll do is I won't do everything completely live. Let's just see how quick I'm responding today. And if I'm not responding that fast, I know it's pretty quick. So maybe I will go completely live. But most people would like to actually look at the returns when we look at a portfolio. And here what we're doing is we're comparing the my portfolio with the IMAP as a benchmark. And the first thing to note, I think, really is this idea of the local return that you get in local currency in local markets, predominantly being a US-based portfolio with some local with some Australian flavor. We have kind of two views here. What's my portfolio return in my currency, and what's the local return in the local market? And very quickly we can see here as a charting, we're really interested in the orange and the orange and the green. Sorry, the total return is the orange and the orange and the color reddy orange. And here over time you can see, look, America was kind of quite flat, given this is mostly a US portfolio. We can start building some narratives as we speak to our customers, or your clients rather, about how the portfolio has behaved over time and the performance of that. You can see that in the local return in the US, so as we got to the oil crisis, there was quite a large smashing to the price of most equities. Although the currency was still in our favor, it showed that from an Australian point of view, this global portfolio actually didn't do as bad as perhaps the US market was doing. But that kind of switched around pretty quickly as we get across into the mid part of the year, where the US really went on that incredible return and very V-shaped recovery. Actually, the currency went against us. So you can see here the contribution here in blue from the US dollar being predominantly on our book actually meant that we were slow, we didn't actually respond as well as perhaps just a straight MSCI index would have done. And you can see there as that perturbation just completes over time, still quite a lot of negative impact through the later half of this year to date from that currency being held in US dollars. And you can see that also here kind of in number terms, if you want to actually start throwing numbers at your customers rather than just the narratives. You can see here again in April, a very large hit from the portfolio currency, from the US dollar really swinging against us. As we go down in this page, what's quite nice is you can see the individual constituents by classification. Energy had probably the best 6 months in our portfolio, but unsurprising that financials really dragged the performance down. Capricorn Bank probably being something we'd rather have got rid of at the start of the year, but equally so, some local flavour in Westpac not doing us any favours at all. And something I just want to note here is, if you see this screen here, we've got some linkage between, actually maybe I will change this linkage here. If I can link these screens together, you'll notice that as I go and click between one piece to the next, the screen here will change. So I just clicked on Bank of Nova Scotia. I now get that single page view updated. This is where doing a live demo is possibly extremely brave. I can go through each of those constituents of the portfolio and start opening up screens that allow me to drive into greater detail. Let me just select Westpac because it's something that we all recognize here. And all these screens at the top here have changed because I've been able to link a lot of the individual screens together. I know Nick says this is one of his favorite pages. It's really just the overall view of a company and some things just to point out that we do have all the news here that flows into that. We have some price performance on the top right-hand side. And as we flow down, let me just actually, before I flow down, let me just point out these two red buttons at the top, CAM and CCR. That's actually the combined alpha model and the combined risk model that our algos will push out for you and give you, and we'll talk about star mining in a little bit more detail, but that's something that's is exclusive to the Icon platform. It's really part of our machine learning surfacing itself. But as we go down the single view, you can just in this one page see quickly some fundamentals. You can see some operating leverage, just seeing the margins there. You can also see some estimates. So we do a lot of aggregating of estimates and recommendations and scores. And certainly if you see anything that says smart, so the smart estimate tends to be our generated score based on lots of other criteria and parameters that are across our system that you may not be able to view depending on the permissions you have with brokers, for example. One example of that is kind of the recommendations, the analyst recommendations here. It may well be that you're unable to see Richard and Jonathan and Andrew's actual ratings and their recommendations, but you'll be able to see a aggregated score up that in this case there's a strong buy by two of them, a hold by five, and a sell by two of them. So quite a lot of people sitting on the fence there. A lot of information all in one place, including those star mine models that I spoke about. So star mine is one of our AI machine learning and kind of algo products. There's a number of models we have, including things like credit risk. What's the chance of a company going under? To kind of what's this price momentum on this? So let's just quickly move along. As I go through the different pages, you can see there's another overview of star mine that you can look at, which allows you to have a view across the sector, and other things like income statements where you can actually drill into the income. And I think I'm getting to the end of this part. So,
yeah, no, that's really a really useful overview, Alex. Thank you, of the kind of portfolio assembly piece. I'm keen to bring it to life a little bit. And so, Nick, I wanted to ask you just around how you use data to help you inform your strategy. So we spoke before the session just around using the example of gold, a very topical investment at this time. How have you been able to use tools, data available to you to help kind of analyze, visualize performance and understand the correlations and impact of holding gold in your investment portfolio over time?
Sure, yeah, no, thanks, Michelle. So yeah, obviously a tricky exercise at the moment is there's two key things in portfolio construction. First of all, the interaction of the assets or the correlation. Second of all, the volatility of the assets. With those two dimensions, you can pretty much refine your asset allocation on a continuous dynamic basis. The way that we use the data is, we don't use the front end, but essentially we're looking at the relationships and the correlations between all of these various asset classes. And yeah, there's probably a way of visualizing this that Alex can show up on screen. The relationships of things like gold and treasuries and equities is becoming particularly crucial at the moment because sovereign bond yields now have plummeted so far that going forward, trying to find assets that successfully hedge out risk assets is going to be increasingly difficult.
Yes, thank you, Nick. Maybe I can just talk the rest of the audience through what we can see here. And Nick, you can talk over the top as well. So certainly right in the middle, the thick view, the thick line here is the spot price of gold. And you can see over the last, I think there's a couple of years here, 2 years, how gold has really gone through this incredible run. And if you compare that to the blue line, which is the S&P index, obviously it's been a bit more volatile by comparison with that massive drop during the oil crisis. And similarly, as you were just mentioning, Nick, bonds being at the lowest yield for some time. Obviously, where can they go to from here unless they're going to go negative, which
Yes.
well, the countries in the world have either gone through and recommended not to. We're still seeing the US and the Aussies certainly not recommending that being a place they want to go to. I think also you mentioned money supply being one of the real driving factors. Put the M1 weekly economic indicator on here to kind of show, well, after that crash in April, there really was a large increase in money supply, which you can arguably say is correlating across each three of those. So gold really pushing it up again.
We've had an environment where, in fact, bonds and equities have been positively correlated in the last few weeks. And that makes us feel slightly uncomfortable in a sense, as they both hit peaks. What next? That's kind of what we're thinking, and a search for successful hedging assets is definitely something that we continue to do, and is a big reason for the popularity of gold in our view.
And just talking through other kind of hot topics at the moment, ESG is something that that we know is very topical and prevalent and as a theme at the moment. Alex, can you just talk us through how you can perhaps view your portfolios through an ESG lens?
Yeah, sure. And as I do that, probably a good way to segue on is I can do actually a quick comparison here of a portfolio I did just with PM Gold as an index that I added on top of, as an ETF rather. And you can see here within our comparison screens, you can see here comparatively against the other the benchmark of the previous portfolio I've shown, if we actually had some gold in our portfolio, we would have done better pretty much in every single month, except for just after the crash. Well, obviously, there's a lot of liquidation of gold, and that brought the price down. But equally so, we can look from an ESG point of view and say, well, how would our portfolio perform if we had much more of an ESG slant on that? So I did another portfolio as well, which just kind of looked at ESG. And equally here, you can argue having ESG as part of your portfolio hasn't really impacted as much as you might have thought. And clearly there's some lag here in terms of the gold being an ESG constituent portfolio against the purple, which is the non-ESG portfolio.
I think one of the great things of having the ESG data set as part of this package is that, if you have clients that have differing objectives, like I mentioned in my intro, the fact that you can quantify those objectives and create a customized portfolio to target those objectives is incredibly important. And it's not just ESG, it might be income, it might be, you name it. There's an exhaustive amount of data sets available. And the only way to create a portfolio is to quantify it to some extent, because that's the only way you can deliver these things on a customized, consistent and scalable basis.
Yeah, absolutely, and that's the power really of Icon, is allowing you to have the information to drive that narrative as well to your customers. I know we do have only a few more moments left. I thought it'd be nice to just drive into a couple of screens that show the extent of content that we have in our ESG data set, so you can really go in to those who kind of want to understand, what is the efficiency of this company in terms of its energy efficiency over time? What's its energy usage over time? You can see there's some scoring. Here we're looking at SAP, which is a company that's particularly good on its ESG scores. There's a lot of data in here in terms of CO2 usage. And this is not just environmental. So we have things like governance as well, on how well the C-suite are running the company, and also controversies. I think my internet is slowing down at the moment. Controversies are an interesting one, because you'll be able to see where they've been in the news. I think in this case they've not actually been in the news at all. Let me just pick up another, maybe I can get hold of Westpac. That's usually quite an interesting one to see what people have been saying about Westpac. Here's Westpac. If I can have a look at the ESG data, let me have a look here. And the controversies, you'll be able to pull up actually not only the scoring in particular areas, like whether they've been in litigation, or whether they've been, you know, if there's been controversy around tax fraud. And not only that, you'll actually be able to pick up the individual news items as well. So of course, that the ability to link across, not only from usually quite discrete data sets like ESG, we're able to actually link together our own content across the news and other content from additional sources as well. So that's quite, I think that's quite interesting. You can see over time.
Yeah, there's a whole range of other data points, obviously, that are available across the ESG sector that is helpful, as Nick says, as you're trying to kind of differentiate constituents within your portfolios. Well, I'm conscious we are on the half hour, so thank you very much, Alex and Nick, for taking the time to explore the topic with us today, and again to IMAP for hosting this series of events. If you have any kind of questions, or if you want any more details around Refinitiv's portfolio offering or any other data requirements, then please do just reach out to myself or Alex. And I believe that I'm handing back to Toby now to pick up the next topic. Thank you very much for your time.
Thanks very much, Michelle, Alex and Nick. I mentioned in my introduction that today would be an information-rich session. And the key point, of course, is that's absolutely what it is. There is no, as Amanda Munro commented to me the other day when we were looking at the awards entrance, there's no shortage of information and available material. It's actually being able to identify it, filter it, and have it easily accessible. And now we're moving from the use of data to a fascinating topic, which is, and one that I personally have lived through, which is IT projects. All of us have had occasion to say, right, well, let's go off and do this thing. And it goes not as well as you might have hoped. I'm old enough to remember Westpac's CS90 project only 30 years ago, when they dropped a year's profit on a computer system they subsequently threw away. But Andrew O'Riordan is joining us now. Andrew has a background in advice businesses, and was most recently operations manager for a boutique AFSL, with roles including head of operations within licensees. Andrew is uniquely qualified to talk to us today about portfolio, about building projects with integrity and robustness. So Andrew, it's now my pleasure to hand over to you.
Excellent. Thank you, Toby. Hopefully everyone's on my screen. So yeah, thank you, Toby, Jenny, Jane, and also Brett for the session here today at InvestTech and the rest of the IMAP team. So as Toby alluded to, so what we're going to go through here is really a little bit about me. Just, yeah, I've worked in the advice space for 20 years, primarily in AFSLs, in operations roles. I've been involved in a lot of data transitions over my time, probably 100 different data transitions between different CRMs. So for me, the key thing is, you know, with new advice tech, it can be daunting. You know, it can be perceived that it's expensive. It can be as well, and time consuming. But how can IT projects, especially in the advice space for advisors, how can they add value to your business? So a little bit about the advice tech adoption, what I look for when changing providers. I guess, what are the goals, the costs, talking about them, how to leverage value between the vendor and the client, and other disconnects and challenges that hopefully can be avoided. And really what I want to focus on is a bit of a case study and the keys to success there. So you may have seen this yesterday in Peter's session, but it's a fantastic tool that the Net Wealth guys put out. It's something I always look at the last few years. I look at this and see and highlight what am I currently using, what are the gaps, what are the opportunities, what are the new players in the market. So it's a 25 categories there, but you know, if you're ever considering moving away from your coins or other softwares, that have a look at what's available in the market. This pretty much has most of the providers there. The Net Wealth guys, another plug for them as well. This is a fantastic advice tech report they do each year. So they get a lot of data from advisors, and they look at, you know, different technology streams, current use, and what advisors are tending to use in the next 24-month or period, and most use suppliers. What I like to do personally when, you know, looking at IT software projects, I like to highlight key things that sort of non-negotiables: CRM system, file storage, sharing technology. Can I use, you know, can you do your email marketing out of it? There has to be a revenue system, your workflow, your activities, your tasks. That's it's so important to be in the one system. You know, having an online meeting tool is so important now, especially in the last 12 months or so. SMAs, definitely moving away from paper-based models, and for me it was always, you know, making sure that SMAs are data feeding into this software that I'm going to look at. Other items like digital dashboards, having a reporting tool all in one, not going to, you know, 10, 15, 20 different systems and build my own dashboards. Other core things like fact finds, risk profiling, you know, scaled advice technology, the whole power planning piece, and even a client portal. They're the key things that I look for when moving software providers. So when moving, I guess the key things are, what's the goal for the client? They want an excellent client experience. That's the main thing that we need to do here. But for the advisor, they also need an efficient experience, and that's for themselves and their support staff. And the support staff, generally, that's where the rocks are. It's the tools to create the advice that takes so long. And we need to, you know, whenever we consider moving software platforms, it's about reducing the cost to serve as well. So I also then, before I start the project, I then, you know, look at the, you know, improving the client journey. So how can we keep them? So are there engagement newsletters or tools or knowledge centers within the software that I can use? You know, we need to save time. We need to give the client transparency. So even a vault is also impossible there to include. Common advice office roadblocks. These are generally the reasons that people consider to move software programs. It's you know, the generation of the SOA takes too long. I have to go to another system to do some modeling. You know, the data gathering, the fact finds is, you know, the clients completing a pay version when we can give them an online portal to complete, which then that feeds straight into the CRM that we're using. The communication email sends, being able to track that is important, but the whole research piece of the advice, you know, relying on the insurance and the super comparators, you know, not going to externals is important as well, unless there's an API that can feed through. Document storage and workflow. So they're generally the roadblocks that I guess make the advice process possibly 26 hours, going off the FPA's latest things. But an efficient solution, end-to-end processes, reducing the cost to serve, speeding up this process. And one thing that is always you know, important for me is reducing the double handling. If your support staff have to data to the fact find, and then later on in another system data enter it again, and then possibly in another system, you need to be able to, there's better ways of doing it. So for me, when I consider moving software, I also use this. This is a handy tool. It's a prioritization poster. So when you're considering moving software programs, you can't do everything at once, and a stage approach is great. So something like the client portal, you may not roll out on day one. You may do that 3-6 months down the track. So working out what are the priorities for your business, what are the non-negotiables, what's the minimum viable price are all important. So something like that can really help what is the value to the business and the ease of implementation. So are IT projects, are they expensive? Are they time consuming? Yeah, they can be. They can be. Things to consider: upfront costs. So the whole, configuration setup. Generally, sometimes there's a cost to get data out of the old software into the new software. There can possibly be conversion costs there. There can be costs for training. There's the ongoing cost of maintaining licenses. And also a big cost is a disruption to the business. Everyone's busy, time poor, but that's a cost that generally gets forgotten in all of this. So it can be cost. If you just look at lighting modules, the first time you get them from the vendor, they can be quite high. So a tip for me is always going back and negotiating module licensing with the providers. But it's normal with implementations to go backwards before you go forwards. And I've got a point there. What if you don't go forwards? Sometimes it can take 3-6 months before you start to see the value. So just keep in mind that when you are, considering moving software platforms, that it's a process. You need to really plan, but you can go backwards before you go forwards. And for you're already time poor, so you don't have that time. But investing in training and so forth is really important to learn the system so you can move forwards. Leveraging expected value. So this is something I've seen over the years. It's that vendor and client. And they start out fantastic once the vendor has been selected, and great intentions, and there's the weekly meetings, monthly meetings, or whatever it is. And then sometimes there's, once the software has been rolled out, the finger pointing commences, and there can be friction, and generally the vendor can say that the client didn't know what they wanted, or a common one that I have seen is scope creep. The goalposts move. The client or the advisors, they weren't resourced adequately. Sometimes there's a support person under that advisor who's got to take on the task of managing this whole project. They've never done it before. So, whereas the client sometimes also thinks that the vendor's going to do everything. There needs to be roles and responsibilities. And the client will argue that the vendor doesn't understand their business, and that the vendor's goal is really just to sign them up, and it's all about the licensing costs. And there's a bit of a give and pull here, give and take here. So the client will sometimes then say, there was no advice. The vendor didn't listen to it. So really, the finger pointing can be removed by just listening to the vendor. They're the experts in this. They've done it so many times. But one of my next slides, it's about having a project plan is really one of the keys. And how can this whole thing, this friction, be avoided? How can we make sure that the software is rolled out, as quickly as possible within budgets? It's about being realistic about timeframes. I have seen, I've been, 15 years ago at an AFSL, and the CEO said, look, we need to move from that software to that software, and you've got 3 months to do it. And the vendor and myself were like, wow, how can we do this? But we pulled together as a team. We had a project plan, and we made it happen. Whereas I've been at other groups where, 9, 12 months down the track, there's a lot of testing, there's a lot of documents, and they're still trying to work out what's the best way to roll this out. So why does it also happen? It's other people or decision makers who actually don't use the software sometimes and not consultative with the actual users, being the end users, the advisors, the support staff, the paraplanners. They're the ones that use the systems that need buy-in in projects. And other challenges with software projects, it's really just not overthinking the project. I've been involved in one where particular staff we're looking to find all the holes in the software provider and vendor. Even with a log-on, we had to test it and going through, and this doesn't work and that doesn't work, and we're possibly not going to consider that, even though it wasn't high in the priority now. What was the minimum viable product? So don't overthink the project. The more you look, the more you find. There can be faults sometimes. No software is perfect. There's some really good softwares out there. But other challenges, internal resources, always gets missed in different advice groups. So it's that day-to-day work. Who does that now? everyone's busy. But when you roll out a whole, you know, moving from coin to midwinter or to X-Plan, it takes time. So, you know, you've got your day-to-day work to do, but just something to think about is that day-to-day work can't get missed. So, you know, having the time and knowledge to really transition software is important. A project manager is really what needs to be brought in for software projects. I've put here where no understanding of advice software. Again, I've worked at a group where a project manager was brought in, didn't understand financial planning, had, yes, project manager experience, but didn't understand advice softwares. The whole project, you know, it came to a bit of a halt, and that project manager had to be moved on and a new one brought in. So having industry knowledge is so important in delivering advice software. And keeping in mind that with realistic timeframes, this can take 3 months, could take 12 months, anywhere in between. There's a lot of challenges and there's a lot involved in a project. So, you know, I've seen a lot. I've seen advice software that the project has run really smoothly, some not so smoothly. But, you know, the whole change management piece and the project plan with the realistic goals and you know, align that to the expectations are really the keys to the success. There's some more we'll go through later on, but what I'd like to cover off now is really that advice software transition project cycle. I think there's 5 key stages here. It's really, the planning is probably one of the most important and critical to get right. Starting with the planning, then there's the design element, the developing of the UAT, which is all the, you know, making sure your advice templates and coded are all up there. Deploying, so the actual rollout, the launch, and then the ongoing support. So that's that advice software transition cycle. I think there's 5 key stages there that I use and have used over a number of years within projects. So let's go through a case study here. So this is a case study, and it, you know, you'll get a copy of this as well. So yes, there's 5 stages, but there's a number of steps in when selecting moving software providers and through to implementation. And I'll run through what they look like. And some of these can be, you know, you can make this as easy or as hard as you want. You could build 50, 100 steps into this. You could just have 5 or 10 steps. But this is, I guess, the best breed approach that I've used before, and seems to work quite well. So with that, with planning stage, and the planning stage, as I said, is really critical. So it's that business thing. Why are we moving? You know, have we got a budget to do this? What's the scope? What's inside the scope of the project? What's outside the scope of the project? As I said, something like a client portal may be stage 2 or stage 3. Sitting down, working out your project team. So that governance structure, you know, appointing a project manager, whether it's an external, it's someone within your business, and generally there is on the vendor side a project manager or a resource that's allocated. You really need someone in your business that can do this. And at this stage, it's quite important to think about, do you actually use one of the third-party consultants that are out there on the market and bring them in from the outset or later on in the implementation stage? So getting what's inside the scope and what's outside the scope, nailing this at the start is really critical. The next step I'd look at generally is what vendors are on the market. And that was that first slide, that wheel of the 25 different categories. And I usually look at that and do my own research and just choose vendors. And you know, I've done before, I've got 4 in, or I started with 8, sometimes a little bit more, sometimes less. And just to really get the vendors in, choose the vendors, contact them and get them in. I won't go through the project methodology, but there's different ways of running projects as well, which is quite important. It's, you know, once you've selected, you know, I'm going to look at these 6 or 7 vendors, get them in for it. It's like a show and tell demo. They come in and they could be, you know, your advice team or your leadership team or whoever it is, even some support staff, paraplanners in your business, and get a demo from these providers. Get them to show you guys what they can do. What is their offering? Once you have had that presentation from the vendors, generally what I would do, and again, I've had a provider that one of their demos just was way off the mark, so they were straight off the list. They didn't make it to the next stage here. So it's really deciding, you know, a bit of the shortlist. You might have started with 7 presentations and now you're down to 4 vendors that are going to go to step 5 there, which is this request for proposal tender. So you may have heard this RFP type document, but it's a fantastic document. Well, what it contains, it's everything about the functionality of that provider. So it talks about, I think Peter mentioned it yesterday, but what's the strength? Who's backing that provider? Are they going to be around in a couple of years? Are they new to the market? What are the resources like? What's their team like? Their support like? It generally talks about high level, what are the costs for licensing and transitions, but a lot about the business, the functionality, everything from fact find, revenue system. And I've seen RFPs that can be just sort of 10, 15 questions. I've seen one that's 50 pages, crazy. It's somewhere in between there, maybe a 15-page document covering advice processes end-to-end and functionality. You should really get a good grasp for that provider in their response. So normally I'd throw that out, and each vendor would have, say, 14 days to respond. And then they come back, and then that's the step 6 there, which is the vendor technology responses. So generally I collate them within that period. Sometimes I've seen the vendors come back, usually they've just filled it in the Word document. Some have created a whole website, look and tell, and it's fantastic. So that's a really good way to see, a little bit of an insight into that partner as to how they respond to that actual RFP. The next, I think, is a really important step in the process there is really just comparing like to like. So that what I recommend is having it's called like a feature and scoring type matrix, and just compare. Do they integrate? Do they have a revenue software as well? Do they integrate with cash flow software, or is there one already built in? Is the risk profiling tool integrated? Does it integrate with Morningstar or Lonsec? So you can go down and down, seeing like for like on the vendor based on their responses and that initial demonstration really helps you to compare and decide on culling that list down from maybe it was 4 at the RFP stage, you're down to say 3 vendors that are going to go to step 8 there. So with step 8, generally what I do is I create a case study. So I make up, an advice scenario, probably super investments and insurance. It's a case study. Make it up, use one of your real clients, change the names, and this is what the goals are, and you give that to the provider. I've done it before and gave them a fortnight's notice on this stage so they can actually create the case study in their systems. But that if I give it the provider that case study, it helps you with minimum viable products. These are things you're starting to look for, that if they can't do one of the items in the minimum viable product, it could be a showstopper. So what I then do is it's that demonstration. They come back in, and this may be the same people from your advice practice that were in the first session. It could be a cross section, and it could be a couple other advisors or someone on your advisory board. Definitely support staff and paraplanners, one of them in there as well is fantastic. But they do the case study, and you will see quite clearly what providers will start to fall off and who will stay around. One thing that I'd also recommend is asking that vendor to demo is actually show you their roadmap. So the next 1 for 3 years, what does it look like? What parts of their technology stack or pile that they're going to build out? Where are they going to be in a few years? Do they have enough support to actually look after your business as well, not just sign you up as a client? So we get them in. I get them in for that demonstration, look at the roadmap. I then, what I usually do is collate feedback, myself included, but from the main people that were in that presentation, using something like Office 365 forms and create a feedback. So these different parts of the advice process, give us feedback. How do they rate? Have a rating scale and feedback and collate all of that. So, which then takes me to, we're still at the planning stage. And as I said, the project planning is so important, but choosing the right vendor is critical. It's critical to move forward. So what I also do roughly at this stage is within the RFP document, there's a whole IT technical requirements section. about the software, the back at I guess their technology stack, and further details that I can look at, or even in your internal IT vendor or provider can look at, and start to make decisions that does it actually work with your own IT stack. Another thing, another good point to do at this stage is doing your own vendor due diligence. Ask for, and I'd ask for it generally in the RFP. I ask for, I guess, a couple of different testimonials or providers that are using the software now, and I call them up and I talk to them and actually find out, you know, from them how it actually works in the business, how was the whole transition and implementation, and what did that look like. Next stage there is pricing negotiation. So that's where I said, you know, try and go negotiate some of the licensing and modules with that shortlist, and even a technical analysis there. Step 12 is probably when you're moving on, you're very close. You may be down to, say, 2 providers there, 3 providers still, and you may get just some trial log on. So you're at design stage. You really, that requires traceability matrix, and you with that, you're doing your own testing, and that's an example there. These are the requirements, and these are the test cases that we go through. Now, we're very close to selecting our provider, whether it's a recommendation internally. If you're a small advice practice, you may, you know, it could just be to your advisory board. It could be yourself and another advisor, or 2 or 3 other advisors on that board, but a recommendation of what that looks like. You're then also going to decide at this stage, do I bring in a third-party consultant that can help me with the implementation? And then once you've selected your vendor, which is that step 14, generally that's when you've got the statement of works and signing contracts to move forward. You're doing things like an order schedule, order licensing. You know, you can then forecast in your budgets how much you're up for in the next couple of years with software charges. You're starting to set up the admin hierarchy, even advisor cost personas. So if you bring a new advisor or support staff into your business, what would that look like? And then point 15 is really that development UAT. So that's the implementation stage. So it's having an implementation plan with the realistic timeframes and rollout is so important. It's all about getting your advice templates right, your workflow right, it's build a system. Have you got your APL in there? Have you got your compliance checklist? Revenue system, that's a whole new stream. Does it link in with your revenue system for your FDS opt-ins? Data migration and testing are obviously crucial. I normally would do a data test of a subset of data into a UAT type site, and then most software providers, whether it was Coin to Xplan or to Advisor Logic, normally there's a standard conversion guide and map document that can be followed. For a number of years, I've always gone the extra level, which I think helps with the data quality, is using a data mapping document. So I call it a custom mapping document, something like what's on screen there. And I generally extract the data and have a look at how many users and how many different counts of different fields, and have a look at some of the data quality. And that custom mapping document really helps with the output and moving forward. Just conscious of time, last couple of points here, integration and UAT testing. So, you know, do you have to integrate, you're rolling out this new software, integrate with your other software and things like your Office or your Gmail, and further business acceptance testing, setting up the whole access levels and logons are quite critical. And the last couple of steps there that really is that deployment and support stage is running a pilot. If you've got the time, run a pilot with a subset of maybe one advisor. If you're a larger practice, one advisor. If not, you may not need a pilot, but a pilot program really good just to iron out any issues and bugs. And then you do your final data migration, which there's generally a blackout period because there's got to be a final snapshot from one system to the other. And training is important. Training is so critical. And if you go live, once you've rolled out your software and it's on, all your templates are looking good, everything's working, it's testing. Even though you run a new system, I like to keep the old system in place for maybe 1 to 3 months. Could be less depending on how the transition went, and just to check data or check things, but not updating things in the old system, updating them in the new systems. That's where we're going moving forward with. But ongoing support is really important. So that was, I guess, a case study of, you know, there's a lot to think about when transitioning and moving software providers. And sometimes, you know, the advisor or the support staff or the client and the vendor, they don't speak the same language. So sometimes you need an interpreter, someone who can bridge the gap, who can really do this for you. Do you have the time and resource to do it? Probably not. So in my experience, I think especially the client would look to maybe a third-party specialist who's done this before rather than the vendor, someone, you know, who takes the emotion out of the decision. So that's really important, is to consider third-party consultants. There's a lot out there. It's something I'm actually doing at the moment. And just in sort of finishing here, the keys to success for me, we've spoken about the importance of a project plan. Really being realistic about timeframes, listening to the experts, the vendors, the third parties, a consultative approach, buy-in from all you, not just the advisors who need to make the decision or someone even at a different level. The support staff, power planners is really important. Change management, it's so some people, they don't handle change well, and that's okay, but it's investing in them and the training and making sure they're comfortable with the new system. The more they use it and get comfortable with it and being upskilled, the easier it gets. And that cost versus value. Don't just look at the cost. If you look at the cost, sometimes it can be scary and it could be a real deal breaker. So look at the value. What's your end result going to look like, and what you get out of it. Just conscious of time, Toby, and just, you know, if you need help with any software transitions, you know, this is how you can find me. You know, I look after, I can do advice software technology, professional standards compliance is also one of my specialties, practice management and training development. So there's my contact details and website and number, and reach out if I can help you, have a chat in any way, you know, what's working, what doesn't, what I've seen. Happy to help you guys.
Andrew, thank you very much. And Andrew is the perfect consultant, absolutely on time and absolutely on budget. We paid him nothing, he charged nothing. But thank you very much. Thank you very much for that. Absolutely on time. That is the definition of a perfect project. Look, thank you very much for attending today. It's been a real pleasure for us to host these two sessions, as I say, information dense. I'm going to post on the screen now a couple of polls, and please answer these. Your CPD is not dependent on them, but it helps us, and we're interested. Those of you who do respond go in the draw for a $100 gift voucher. Today's sessions and the slides, and in Andrew's case as well, the checklist will be available on our site within the next couple of days. So thank you very much for attending. Tomorrow we have Tanya Searle, who's the Chief Operating Officer for La Vista, one of the leading dealer-to-dealer services, will talk about her experience in implementing technology, followed by what I think will be a really interesting session, which I've called "What do the robos know that you don't know?" How is it that robos can manage to find, put through a question and answer process and take on clients and then provide ongoing services without the intermediation of human advisors and support staff? What is it that the robos can teach us about the delivery of financial services to retail clients? So please join us tomorrow. It's been our pleasure to organise InvestTech for you, and we look forward to you joining us for this and future IMAP events. Thanks very much.